Today we are actually talking about really popular topics, concerns, whatever you name it. It is really a thing that right now heavy on everyone's mind. And today I am not talking about how to do mark to market. What I want to talk to you about is if you are having a loss, uh, investment loss, stock market loss, and your options went banana and you get a loss. And all of these things, if you are one of those people, today I just want to lay a large picture for you so you know where to deduct your loss. That's really what I'm trying to do. And let's get going with this presentation. I'm going to use a whiteboard, but for right now, I want to say that this is what we're talking about. Tax treatment for trade losses. I'm not talking about gain. I'm not talking about losses in business. I am not talking about gambling loss. I am talking about trade losses, stock losses, the stock market losses. You may say that that's just like a gambler doing stock trading. Well, in life, who doesn't take some risk? So the people who took the risk on the stock market, if you have a loss, yes, you come over here. Let's talk about big pictures. And before I start that, I want to tell you that Community CPA is a sponsor for Immigrant Entrepreneur Summit. One of the primary sponsor of the event, and alongside with Wells Fargo. You can tell that the presenting sponsors Wells Fargo and the Community CPA. And this event, if you go to iesusa.org, and then you can purchase ticket, join the event. I'll tell you, this is the event that you really learn. If you say that you go to other event, you don't learn, you come to this one, I promise you, you learn so much that, and you felt you can handle it, because that's our job, is to make the business knowledge understood by people who doesn't have it. No responsibility disclaimer, and for all the website content, right? So that's really it for the slides I give for you today. But what I want to show you now is to start drawing the board. We're going to talk about losses, and you can see why I'm so adamant about we need to know what kind of treatment in the big picture that you should have. Of course, everybody can say that, well, big picture doesn't help me and I am not going to learn anything. That is not true. I will tell you that if you really understand what that means in terms of your losses and in terms of the structure around the losses, and you know how to treat it. So let's just share screen. So I'll get you to my whiteboard. So now we're going to talk about losses. So when you have losses, and I want you to think three things related to losses. So number one is the losses is under your personal name, or the stock losses is under your business name. The reason I say that is you could open up your stock trading account under your business. You could have a business, right? You may have a C corporation, and you may even running a S corporation and running a restaurant, but in that company, you have an investment account. So you could have your losses happen under your corporation. But you could have your losses happen under your personal name with your personal ID, and you're receiving these 1099 statement from your brokerage firm. Am I right? So that's probably the scenario most familiar to you. But folks, do you realize that when you are in that situation with your trade under your name, there is two ways you can deduct the losses. Number one way is everybody know you can have a capital loss with $3,000 limitation. So even if you lose for $3 million, too bad, you can only deduct $3,000 a year. Of course, that doesn't mean you're going to live for 1,000 years to deduct 3,000 a year, because in life you will be, you'll be getting gains, you'll be having capital gains, so you can offset the losses that is already in your system. So it's just not going to be helping you for that year. Let's say if it is a year that you made a lot of money, but you really lost it all on the stock market. And then you don't have money to pay taxes, but the loss only gave you $3,000 deduction, income deduction. So it doesn't work for you, right? You could be in that boat. So that's a regular passive investor route. So if I draw, I would make that one item. So you are a passive investor, you only deduct $3,000 a year if you lose. The other one is what we call the mark to market, folks. And remember I was showing you on the YouTube channel earlier. Remember here, and this is mark to market. You see how this, this is the videos that I was going to draw, but it didn't work. But this is the previous videos I did, and where we talk about mark to market. So mark to market, if you choose to become a day trader, to be treated as a day trader, have a mark to market treatment, then your losses is not limited to 3,000. Your losses come out as if you did a business and the business has a loss. So no limit. It will offset all the income you have on your 1040. So you may even ended up with a negative AGI because you just lose so much. So under your personal name, you have two ways to go. You are a passive investor, or you elect yourself to be a day trader and to elect yourself with the election called mark to market. This is really the videos that, on our website right now is right here, is this one. So it tells you what you can do. Of course, I don't have the time to go into detail to tell you how to become, but this video right here will teach you how to become a mark-to-market day trader. And once you become a mark-to-market day trader, the steps to make sure that the treatment is good for you. And if, say, one day, I had this question last week. This gentleman elected already to be a mark-to-market for 2022. So he's saying that 2022 it works because, I have losses that offset my W-2, and I'm really good, and I save some taxes. Then he said, but I knew I'm going to do better in 2023. The market is going to come up and I'm going to have a gain. I really don't want all of my gain become a regular income. Then that will be paying so much taxes because it's not a capital gain anymore. It is a regular income because I elected to be mark to market. If you are in that shoe, and I just want to tell you this, you want to hear, mark to market election is by your brokerage account. Not all of your brokerage account need to be mark to market. So with that said, you actually can close your brokerage account that already elected to be mark to market. So you're no longer running that day trader business. You went back to work. So you are a passive investor. Then you open up a new brokerage account as a regular investor. Then you will start getting 1099B and everything. Then you will be limited to $3,000 again on loss, but on the gain, it will be either short-term capital gain or long-term capital gain. So with that said, you see on the personal side, as a person, when you hold out to do the stock activities with your social security number, and you are actually either choosing yourself to be a passive investor or you choose yourself to be a day trader, right? Of course, you need to qualify day trader. So, someone was asking me, hey, can you find me a day trader definition from IRS so I can see whether I am a day trader or not? And unfortunately, I can't get that for you because IRS didn't have that definition for day trader, saying that if you got white hair and red glasses, you're a day trader. It's not like that. So IRS just had a court cases that established the general understanding of day trader. You must be trading daily, just as the name suggests, right? If you just occasionally trading and you say, I am day trader, well, sure, you can still claim you are a day trader, but if you get audited by IRS, the auditor has a right to disagree with your position. So with that said, you want to make sure that you get your eligibility study done before you become a day trader. So now, remember we were going to talk about three separate sections related to trade loss. One is the passive investor. We talked about $3,000 limit. The other one is the day trader. We talked about mark-to-market election, how that works, right? And I also said that to know more, you want to go to the YouTube channel and really just look at this mark-to-market YouTube. I didn't really want to play it. It will override my voice here, but you can definitely look into that. It's one of the video that I myself considered I did good. Okay, I have some videos I myself not satisfied, but this is the one that I think is really good. I posted for 3 hours already 11 views. So that is pretty, that tells me people really need that. And with that said, I want to mention the third one. The third one is what? The third one is the investment account in your business. So you can set up a company and that does investment. I know that people will say, no, you can't, that's illegal. You need to have a license. Let me clarify this, okay? And if you set up a company to do a day trading business and you're only day trading your own money, no one needs you to have a license. But if you are trading like those financial planner agent and trading under certain platform, and then you need to be licensed, with a financial planner side of requirement. If you're trading other people's money, if you have more than 35 people who come to you, you are trading for them, you do need to look for professional licensing. You need to meet professional licensing requirement to do that. But anything less than that, you're doing it for your mom, you're doing it for your dad, you're doing it for yourself, and you absolutely can do that. It is something that you can invest. But a lot of time, in my view of this investment, I'm not talking about the professional investment firms, because those professional investment firms, their trading is their regular business. So anything in and out is become income and expense, right? I am talking about you are running a Tesla. I'm using Tesla as an example because that's what Elon Musk did in 2021. So Tesla is in the car business, is not in the cryptocurrency business. Am I right? Yes, I'm right. But Elon Musk bought Bitcoin stock, right, in Tesla. When he buy that, is that treated as part of his business running? No, it is his investment. So his business is investing in Bitcoin. So when you are doing investment in your business, say you have a construction company, say you have a restaurant, and if you invest under your business as a way to preserve your money, at that time, and your trading is regarded, and your trading buy and sell, gain and loss is part of your capital gain and loss inside of that company. So one thing I want to draw your attention, there is a thing called impairment testing. Impairment testing means that when you hold certain stock and or cryptocurrency and the value went down, you didn't even sell, but for your company financial statement, you no longer have that value on there. It already went into a toilet. $100,000 become 1,000. And as a financial statement, and you cannot present your financial statement to the banker to borrow money and it says that, oh, I still have this $1,000, $100,000, it's not worth that much anymore. That's called impairment. When you have impairment in your investment, you are allowed to write it down because it's a business investment. So you are allowed to write it down to the value it should be. So if you invest in Bitcoin for $100,000, on December 31st, your Bitcoin drop into $100. Then you can write it down for the difference. Where did you go with that difference? And you may say that, well, what do you mean by writing it down, Ying? You mean I can just take the difference and reduce my income? I can just reduce my income. I made a $200,000 profit. You're saying that I can just reduce 100,000 out of the 200,000? Absolutely. That is an impairment write down. Of course, you cannot be just sitting there with your cigar and it goes, oh yeah, I think my investment went down by a lot. So let's just deduct that. And because I make too much money, that's wrong, right? And you want to evaluate that. So what does the evaluation mean really to people? A lot of time, company with a lot of asset and company doing the right thing is has an evaluator outside a business evaluator coming in and to evaluate certain portfolios. So that's how Elon Musk does. And he has a team. They tell him that, well, your $120 million Bitcoin and it should write down for 100 million. And he will write down for 100 million. Then Tesla will not pay so much income tax. But what happens? And if you are running a small company and you just can't afford that $8,500 ticket for doing evaluation, then what you do is you will look at the market. I think for stock and for cryptocurrency, the market value is so clear. It's right there. And you can look for the market value, make adjustment, and to make sure that your book reflected the true value of your business. So that is what the business side of investment does, which is so different from our personal side. Am I right? And so with this talk, this is where I want you to gain a general understanding and understand that there is three ways towards the losses. So number one is to know who holds the loss. Is that the business or is the person? And if it is the person, and how is the person holding the loss? Is that a passive investment or day trader kind of job, right? So those are two very different. But in business, and you want to, of course, if you sell them, you definitely already have the gain or loss coming through. But if you don't sell them, you hold them at the end of the year, and then the value went down, then you have an impairment testing to write down the value that went down. But what if the value went up next year and you didn't sell it? And if value went up, you don't adjust the gain. And you only adjust the gain when you sell it. So that is where impairment testing goes one way to income statement and doesn't come back to balance sheet. So it is just stay there until you sold the portfolio. So with that said, and I want to look into questions that there are two questions on the board right now. So someone is asking, I thought you would talk about mark to market. I could talk about mark to market. We have like 8 minutes left. Do you have any previous recording for mark to market? Yes. And I showed you right here, right? You are seeing it and it is right here. But let me just simply give you a summary of mark to market. And if you are a person and thinking of doing mark to market, know that election, that 475 election can only be done in April. So before you file extension or before you file taxes in April, you want to file election at that time. And when you do election, it is always electing for the year you are sitting. So April 15 is coming, right? That's 2023. When you file election in April 2023, you are electing mark to market for 2023, folks, not for 2022. 2022 mark to market election has already came and gone. It is not here anymore, and you are late if you are looking at 2022 and wondering, man, what's gonna happen? I want to treat my 2022 as a mark to market. And there are mark to market election is automatic election. What means is the IRS will receive your election, but IRS will not write you letter goes, hey, dear taxpayer, I saw your election. Congratulations, and you got it. There's no such a thing. And you just file that with IRS, and some people mail it out, and then they come back and ask me that I did that, Ying. I didn't know where, what happened, because how come nobody told me that, they accepted. And the way to signify that you actually got accepted, it is you taking the mark to market election to your brokerage company to change your brokerage account. I just got an email from a client and who went to the brokerage company, tell the brokerage company that I elected myself to be mark to market, and this is the account I want to be mark to market treated. And the brokerage person who talked to the client were saying that I don't even know what you're talking about. So I was going to just tell the folks that if you come across someone at a brokerage firm and they tell you that I don't even know what you're talking about, and they're probably just so new, they didn't know as deep as they should, you just need to change to another person. Tell them that you elected the mark to market in 2022 already, and before December 31st, please, ladies and gentlemen, you cannot wait. You need to go to your brokerage firm, tell them which account is mark to market, because as soon as they switch that, you'll be getting a statement that is more like 4797 statement, not 1099B statement. You want your IRS has the right statement for you, so your mark to market is not complicated. Okay, so you're gonna, you filed extension already, you filed the election already in 2022. Now you're gonna change your brokerage firm right now soon, okay, for 2022, and then after that, and you're ready to file 2022 tax return. When you file 2022 tax return, there is two things you must remember. Number one, you need to make sure that you file 3115. That is not electronic fileable form. It is something that you need to mail out. And then you need to mail out before you mail out your taxes. So that is one. Number two, you need to file on your 1040 form. You need to do it on 4797 and not on Schedule D of your losses for your investment or your gain for your investment. And know that if it is gain, it's going to be a regular income. So you're going to pay regular income tax, not capital gain tax. So long-term gain, that'll be a sad thing. If you elected your long-term investment to be mark to market, you are doing it wrong. Remember what I said, mark to market is a account by account treatment. You don't have to have all of your investment account become mark to market. You choose only the one you do daily trading. The long-term one, you can leave it for your spouse or for yourself because you don't treat that one that often. Am I right? So that would give you, I hope that would give you a little bit more understanding of what we're trying to accomplish here. And I want you to understand the loss. I want you to understand that the loss has three different ways to be treated. Depends on who has the loss. The loss is under a EIN number or the loss is under Social Security number. And with Social Security number, you can have passive loss or you can have mark to market, which is a business loss. So I hope that we translated some knowledge to everyone, and apologize for the word doesn't work today. I will figure out technical things, Go on to our YouTube channel and, subscribe to our YouTube channel, share our content, and I will see you again on Saturday. Oh, this Saturday, it is horror stories about audit. So I actually will use some of our real examples of audit, and horror story, not so much of, we got ghosted by IRS or by the state. It's not in that way. It is more of how horror feelings that our taxpayers would have when the audit come and how you would prepare the audit. And it is so important because every time when recession is here, if you look in history, and the audit rate will go up. The audit rate will go up because that's one of the way the government will secure their fundings and finding money. There's $300 billion and expected from the audit findings from IRS alone. So it is not a small number, and obviously compliance is needed, and we want the business world to be orderly, so we don't have people who are billionaires, millionaires, and actually don't pay taxes, and the small peoples like us, we only make what? Then we're paying taxes, and from head to toe. Some of my taxpayers actually borrow money to pay taxes, And it really not meant to be that way. If something is not working, but we are here and wanting to make sure that we're doing the right thing, but at the same time, we knew IRS don't need us to pay tips. That's all what it is, right? And we want to be doing right, but doing it beneficial and for both ourselves, family, and also in compliance with the government. All right, I'll talk to all of you again on Saturday and see you. Bye-bye.